Trends, support, and resistance levels. The trend. What is a trend? A trend represents the direction of movement of a particular financial instrument. We can notice the trends visually, and the basic division of trends are uptrend like this one here, then a downtrend like this one here, and a sideways trend like this here. What are the basic features of an uptrend? The first and main feature of growing trend is that chart forms higher tops in relation to the previous and higher bottoms compared to the previous ones. We can clearly see that there has been growth from the beginning of the chart to the end, and this tells us that there is a clear upward trend. As for the downtrend, the basic rule is that chart forms lower peaks in relation to the previous ones and lower bottoms than previous ones. From the very beginning of the chart to the end of it, we can clearly see the fall in value. So it's a clear downward trend. The third type of trend is sideways trend. This trend is characterized by the inability to determine the clear direction of movement of a financial instrument. So we have a situation where the tops and bottoms are dispersed all over the chart, so we cannot determine what trend is about, and for this reason, traders advise avoiding trading with such trends. Uptrend tells us that the bullish market is in effect, so traders are advised to trade in line with the trend, which means that they should opening the buy positions. Downtrend tells us that the bearish market is in effect, so traders are advised to trade in line with the trend. As for the sideways trend, my advice is to avoid trading with currency pairs that have movement without clear trend. In addition to this basic division, there is a division by the duration of trends. In this way, we can divide trends into short, medium, and long-term trends. Short-term trends last from a few days to a few weeks, as a rule up to a month. Medium-term trends last from 1 month to several months. Trends that last more than a year are considered long-term trends. We can see several different trends on one chart. It can appear uptrend, downtrend, and sideways trend on the same chart, but they differ in duration. Shorter time frames, such as the M15 or M30, are used to determine short-term trends. For determination of medium-term trends, the H1 or H4 time frames are mostly used, and the D1 chart is mostly used to determine long-term trends. The D1 chart is active in front of you, and we can see that there is a clear uptrend on the US dollar-Russian ruble currency pair. It was formed from January 2018 to February 2019, which means more than a year. What can we conclude? We can conclude that the long-term trend on the US dollar-Russian ruble currency pair is growing, which means that in the long term the dollar is growing against the ruble. Please pay attention to this part of the chart. We can see that this is a period of consolidation. We do not have a clear fall of growth, which means that this is a sideways trend. This is not a long-term trend, as it has lasted for several months, from April to August, about 4 months, which means that on the same chart we have a medium-term trend, and that is sideways trend. After that, the trend continued to grow, and then again comes to the consolidation. Let's switch the chart to the H4 time frame. We can notice a clear downtrend if we look at this last wave. This wave was formed from December to February, about 2 months. It also means a medium-term trend. This time it's a downtrend because we have lower peaks compared to the previous and lower bottoms compared to the previous ones, which means a clear downtrend. Okay, this latest movement represents growth. Now I will switch to H1 or M30 time frame. Okay, we can see a growing trend. Tops and bottoms are higher in relation to the previous ones. This trend lasted from January 31 to February 14th, which means about 2 weeks. So this latest movement represents a short-term uptrend. As you have seen in one chart, we can have a short-term uptrend, then a medium-term down or sideways trend, and long-term uptrend. Also, there is another rule, and that is the short-term or medium-term trends are only corrections of a long-term trends. Corrections represents the temporary movement that is going to be stopped in a soon period, and then the price will continue in the direction of the main long-term trend. When you open a chart, turn off all indicators if you have some active on the chart to get a clear chart like this. Just look at the chart and try to determine what kind of trend it is. As we can conclude, this chart clearly shows the growing trend. However, in addition to looking at the chart, traders should follow certain rules that define a strong trend. The basic rule is related to the important tops and bottoms on the chart. So the next tip is mark the important tops and bottoms. Okay, let's do it. This is the first important top on the chart. This is the first bottom. Then we have the second top, then the second bottom. The third important top, then bottom, fourth top, and this is the last important bottom. What does this tell us? Higher tops in comparison to the previous and higher bottoms in comparison to the previous ones are constantly appearing on the chart. What do these tops and bottoms tell us? This growth was caused by bullish traders who believe that the price of this currency pair will rise, so they open buy positions. We can conclude that their strength is much stronger than that of bearish traders. This drop was caused partly by bearish traders, but partly by bullish traders who closed their winning positions, and that caused this little correction. Very soon after the correction, the uptrend continued. The proof that there are more bullish traders than bearish traders was broke through the level of the previous top. After the growth, the correction comes again, but even this correction failed to break the level of the previous bottom, and the price started to rise again. The level of the previous top has been broken, which means that the bullish traders still have great strength, and we can believe that this trend will continue. In addition to the tops and bottoms, you can use some trend tool, for example, moving average indicator. I will click on the indicator list and select moving average. In the new window, we can adjust the indicator. Since this is a D1 chart, I will leave period of 100 and simple moving average. As we can see, most candles are above the indicator, which is a clear sign of a strong growing trend. Contrary to the growing trend, as long as there are lower lows or tops in the chart compared to the previous and lower bottoms compared to the previous ones, we can believe that the downtrend is strong and it will continue. Now, in addition to the concept of a strong trend, I will also like to explain to you the concept of healthy trend. We can say that the trend is healthy if there are a nice corrections. So we have strong growth, but we also have a correction of that growth. Then again a period of strong growth and a correction of that growth. Then again a strong growth and again a correction. We have steady growth that is at an angle about 45 degrees. Also, this downtrend, as you can see, is formed not by a constant decline, but by decline with corrections. The strong fall was followed by a correction, fall, a correction, a fall, a correction. We can say that trends like these are healthy and they are suitable for trading. In addition to these trends, I would like to show you just a second. Here we have a good example. There are trends that are too risky for trading. What do we see on the chart? This movement represents a period of consolidation. This is a short-term trend because we are on the H1 time frame. After consolidation suddenly comes to a strong growth. We see a small correction here, but then there was a huge increase in price. Look at the angle of this trend. The healthy trend has about this angle of movement, and check out this one here. Extremely sharp angle of movement. Although this growth was very dynamic and seems stronger than the previous ones I showed you, I would advise you to avoid trading with such sharp trends, because as such rapid growth occurred, it could very quickly drop. Traders also use trend lines and channels for trading with trends, but based on this we cannot know from what level we should enter a buy position in a growing trend or a sell position in a downtrend. In addition to all other tools, trend lines can be used for this purpose. The trend line is a tool that is used very often, and there is almost no trader who doesn't use it in trading. Let's first say how to draw a trend line. There are several ways. In an uptrend, trend lines are drawn by connecting the bottoms, while in a downtrend, trend lines are drawn by connecting tops. To repeat, in the uptrend we connect bottoms, in the downtrend we connect tops. We can draw a trend line by connecting two important bottoms, a minimum of two. What we've got now? We've got a trend line that tells us if the price starts to fall now, and if the price hits the trend line, we will have a buy signal and a potential level from which the price can start to rise again. There is another way to draw a trend line that I think is better, and that means connecting as many points in one trend line as possible. What does it mean? This means I will start to draw a trend line from the same level, but I will not connect these two bottoms, but will try to draw a trend line that touches as many points as possible. This is 1, 2nd, 3rd, 4th, 5th, and 6th. We can see that this bottom has crossed the trend line, while this one didn't achieve the trend line, but in any case, in the zone around the trend line, we have 6 important bottoms. We can say that the trend line drawn this way is stronger because it contains more important points. What did these trend lines give us? By simply looking at the chart, we could determine that it was a growing trend, but we had no idea at what level to open a buy position. With the help of the trend line, we can more precisely determine at what level to open a position, in this case a buy position, because the uptrend is still strong. We have a buy signal when the price approaches the trend line. Every next time, as happened here and here, when the price hits the trend line, we have a signal to buy. It doesn't mean that we have to open a buy position, we only have a buy signal, but with the help of some other technical analysis tools, we can decide whether to open a buy position or not. As for the downtrend, the situation is similar, but reversed. It means that now we connect highs. I'll try to connect as many dots. Just a second. We can go like this. We have 1, 2, this is 3, 4. 4 points are connected, and we got a trend line. This trend line also gives signals for trade, but this time for sell position. Let's imagine that this movement hasn't happened yet. We will ignore this top and connect these previous ones. This is 1 here. This is the 2nd, this is the 3rd, and this is the 4th. I will connect these tops and stretch the trend line to the end of the chart. We will imagine that this movement hasn't happened yet. So we have a sell signal when the price approaches to the trend line. This didn't happen here, but when the price first time hit the trend line, we had a sell signal. As you can see, there was a huge fall after that. I will extend this trend line a bit more. Here we see another situation. The trend line is broken. There has been huge growth after that, but the same situation could happen here. What do I want to tell you? The trend line gives us signals to sell, but that doesn't mean you have to open a sell position immediately. Here we had a sell signal, but traders who use trend lines are generally looking for some additional confirmation to open a trade. Here it could have been this previous peak, also this one, so we have some resistance zone, which also indicates that there could be a fall if the price hits the trend line or enters the resistance zone. Stop loss could be placed above this zone. At the next level, when the price hits the trend line, we can see that we have no any other confirmation, at least as far for the tops and bottoms. When I mark the cross-section level, we can see that there are no important points. The trend line was broken, and we have a clear break of the trend line when the whole candle is on the other side of the trend line. As we can see here, we have another break of the trend line, but the price didn't stay above it, but very quickly returned below the trend line. Here we have a few candles opened and closed above the trend line. This situation may indicate that there may be a turnover in the price movement. Okay, let's repeat. The trend line provides us with buy and sell signals. Every time the price approaches the trend line, we have a signal to open a buy position in uptrend or a signal to open a sell position in downtrend. When we see clear breaks of the trend lines like this one here, we can expect a change in the direction of price movement. What is a channel on the Forex market? The channel represents two parallel lines between the price moves. Here we can see a trend line. To add another, what do we need to do? We need double click on trend line, press Ctrl, and just drag another line to get the channel. The channel is a zone framed by two trend lines, and price oscillates between these lines. The channel provides us with more information than a trend line. We said that in a growing trend, the trend line gives us buy signals. So this bottom line is a support line for us, as we expect the price start to rise when it hits the trend line. What information gives us this top line? This top channel line tells us where we could place the targets. So in this case, this is a resistance line, and we can believe that the price will bounce when it approaches the resistance line. There are traders who say that the upper channel line should be used for setting sell orders on it, and the lower channel line should be used for setting buy position on it. I don't want to advise you like that. My advice for you is to trade in line with the trend. What I want to tell you, when the price approaches the bottom line of the channel in a growing trend, we have a buy signal. So I'm not saying you have to open a buy position right away, but you have a buy signal. If you open a buy position and the price goes in the right direction, set your target at the upper line of the channel. You don't have to wait for the price to hit the top line, but set a target in the zone below that line. So don't rush with opening sell position immediately in such situation. Although it seems tempting, and as we can see in this example, we would make money both times, my advice is to set buy orders on the lower line and use the upper line as a potential target. Of course, the price will not forever move within this channel. As you can see, the price is again bouncing from the bottom line of the channel, and of course there is a chance that it will continue its growth. However, we cannot be sure in that. Now I would like to give you some tips on how to recognize if the price might break the channel line and reverse the original trend. I will switch to another currency pair. We have a good example here. This is a growing channel. As we can see, it is broken. But before the breakthrough happened, we had a few signals indicating that there might be a change in the direction of the price movement. I will increase the chart a bit. What happened here? A channel is considered as strong as long as the price hits both the lower and the upper line of the channel. When the price in a rising trend fails to touch the upper channel line, and when a new peak appears that is lower than the previous one, as we can see here, this peak is lower than this one, and also this peak is lower than this previous one. These are the first signals that there may be a change in the direction of the price movement, as it happened later. Very soon after this, the channel was broken. Of course, a small break of a channel is not a big deal. As you can see, it happened here, but the price returned to the channel quickly. When several candles appeared outside of the channel, we have a clear signal that change is occurring. In such situation, it is definitely not wise to go into buy positions. It's better to think about sell position. As you can see, there has been a huge decline after this. I advise you to trade in a line of the trend. However, many traders do not like this method of trading because they think while the channel is formed, the price already made a big growth and then it's too late to enter a buy position. In such situations, they rather wait for the breakthrough of the channel and try to catch the trend reversal. So they are trying to find a situation where the trend reversal may occur, and then they are opening the opposite positions to the original direction of price movement. So in the next lesson, I will give you some tips on how to identify a potential. In order to understand how to identify a trend reversal, it is necessary to repeat the main trend features. The basic is that there is a structure on the chart. This structure consists of higher highs and higher lows in an uptrend and lower lows and lower highs in a downtrend. When that structure is disrupted, we can assume that there will be a reversal in the original trend. As I said, each of these rising waves were caused by bullish traders, while the corrections were due to bearish traders. As long as higher highs appear on the chart, we can believe that bullish traders have more strength than bearish. When this structure is disrupted and a new peak such as this one appears, which is lower than previous one, this tells us that bullish traders are losing their strength. In that situation, a good portion of them no longer believe in continuation of the trend and they are considering to close their buy positions. Closing a buy position, in other words, means transition to bearish side. Then comes to a change in the structure of traders, and now we have a situation where more traders think that the price of the currency pair will fall than continue this strong trend. The most important signal in the uptrend that tells us that there may be a reversal in the trend is when the new bottom appears that is lower than the previous one. This bottom here, which is lower than previous one, tells us that there are more bearish traders on the market now, and this is the first strong indicator of a trend reversal. Please pay attention to this movement here, this little leg. It represents an attempt by bullish traders to return the price in the original direction. Price did go in that direction, but didn't have the strength to continue and break the level of the previous peak. This tells us that the market is going to change, that bearish traders are gaining strength and that a potential fall in price on this currency pair is very possible. We can also get a trend reversal signal with the help of trend lines and channels. Look at this situation here. When the trend line was broken, we've had the first signal that there could be a trend reversal. So when one complete candle closes below the trend line, we have the first signal for trend reversal. Still, my advice to you is to wait a bit. As you can see here, the price returned, tested the trend line, and then started to drop rapidly. When the price has broken the level of the previous bottom, in that moment we had a clear signal that a reversal could occur as it happened later. Of course, in a downtrend, the same rules are applied as in a growing trend, but in opposite direction. A strong downtrend is one that is formed from tops and bottoms lower than the previous ones. When that structure is disrupted, we can expect a change in the direction of the trend. In this example, we see that this structure still exists. We only have one small signal, and this is the small last bottom that is higher than the previous one. But until a new peak appears higher than previous one, for example a peak higher than this one here, because this is an important peak on the chart, we do not have a strong signal for a potential trend reversal. Many traders base their strategies on breakouts like this. So they are waiting for a change in structure. When the level of the previous bottom is broken in the uptrend, it is a signal for entering a sell trade and try to catch the new trend at the very beginning. In such situation, you should set stop loss slightly above the previous top. trade entry should be made after the breakout of the level of the previous bottom. All of these terms that I mentioned in this and previous lessons, like previous tops, bottoms, trend lines, channels, actually represent levels of support and resistance. Support and resistance are the most important items of technical analysis. First of all, I have to say that support and resistance levels are not precisely price levels or points, but zones. The other important thing is that the same zone can be support, but also and resistance zone. So support can act as resistance, but also resistance can act as support. Let's first say something about support. Support is always a certain zone below the current price. So if this is the current price level, we can find the support zone somewhere below that level. Support zone can be located on different places because these zones can be defined in many different ways. Success in determining these levels in some ways also means success in trading. There are several ways to find a support zone. The first and basic way is to look at the chart and see at which zone the price was open bouncing. It means which level or zone the price often recognized as important and after it moved in a certain direction. Let's see. This is the lowest bottom on the chart, and we can see that the price has only once bounced from that level, so it's not so important level. The next bottom is this one here. We can see that the price has once bounced from that level, which also means that the level is not so important. Then check out this zone here. Price has bounced once, twice, thrice, 4 times, and for the 5th time from this zone. I will mark this zone and I can freely say that this is an important support zone on the chart. What does this zone tells us? It tells us that if the price drops and re-enters the zone, we will have a signal to enter the buy position. So the support zone always gives the buy signals because we expect the price deduct and start rising from that level. This is the simplest but the most important way to determine the support zone. You should just pay attention to the highs and lows on the chart. Simply look at the chart and mark the zones from which the price often reacted. Of course, there can be many support or resistance zone on the chart. To define a zone as important, you need to have at least 2 points located at approximately the same level, but it is better to have 3, 4 or more points in the same zone. There are other ways to define the support zone, and very often trend lines are used for this purpose. In this situation, the support zone represents the zone around this trend line. In order to draw a trend line, we need 2 points. If the price bounces from that line again, we'll have a confirmation that this is the strong trend line. In this case, the support line, because there is a growing trend on the chart and that line is below the current price. So it's support for the price. So in this situation, we have a signal to enter buy position. I said that support level or zone like this one, or also in this example of a trend line, the support zone could become a resistance zone. When does it become a zone of resistance? When it becomes broken. If the price breaks through the trend line and after that return back and approaches to it, we can expect that the price will bounce down from it. In the situation like this, support line becomes a resistance line. So the same line, which was support line or zone, could become a resistance line or zone. We can also use channels to determine the levels of support and resistance. As for the channels, the bottom line is always the support line, while the upper line is the resistance line. This rule also applies to downtrend. In an uptrend, it is advised that the bottom line should be used for buy trade setups, while the upper line is used for profit targets. In the downtrend is reversed. Then the upper line, the resistance line, is used as the line for sell trade setups, while the bottom line is used for profit targets. Okay, let's repeat. What is a support zone? Support zone is a certain zone, not a line, not a point, not a certain level, but a zone below the current price from which we expect the price to bounce and continue the movement in the original direction. We can identify it in several ways, but the basic way is to look at the chart and mark the zones that price recognizes as important. If that zone is below the current price, we can mark it and say it's the support zone. Resistance zone is a specific zone placed above the current price. So since this is the current price level, we will look for a resistance zone somewhere above that level. The resistance zone provides us with sell signals. It is a zone above the current price from which we expect the price to bounce down when it hits that zone. Just like the support zone, we'll try to see it first visually, and we'll do this by looking for levels or zones from which the price has often bounced. Each of these peaks represents a potential resistance, but it is always better to look for a zone that price has been unable to break several times. This situation can be seen here. Look, it is enough just 2 or 3 picks to mark this zone as a resistance zone, because the price could not break it several times. When the price enters that zone again, we have a sell signal. As we can see, the fall occurred again. The price re-entered that zone but failed to break through it and fell again. We can see that the price entered this zone for the 5th time. Okay, here is missing a few pips, but after that, the price made a huge fall. So this is definitely an important zone and we should pay attention to it. In this case, it's a resistance zone because it is above the current price, and if the price jumps again and enters that zone, we will have a sell signal again. If this does not happen and the price breaks through the zone, then it becomes a support zone. After that, if the price drops and enters that zone, we can expect it to bounce and continue to rise. So when a resistance zone breaks, it becomes a support zone. We can also use trend lines as zones of resistance. We can see a downtrend on the chart, and we got this trend line by connecting these few important tops. In this case, the trend line represents the line of resistance. When the price approaches that line, we expect the price to decline and continue in the original downtrend. As we can see it happen here, then the price again approached the same line of resistance, touch it and bounce again. To draw a trend line, we need at least 2 points, but we also need a 3rd point to confirm that line as a strong support or resistance line. So after 3rd point, we can say that this is a strong line of resistance, and here it's confirmed because the price after that bounced back twice from the same line. We can see that the current price is also very close to that line, and if the price hits that line again, we'll again have a signal to enter the sell position. If that doesn't happen, but the price breaks this line, then a resistance line becomes a support line. If the price comes back, hits that line and jump, we can expect there will be a change in a trend and the price will start to rise. These were rules about resistance. Let me just say, I just like to show you one example where the same zone turned out to be both a support zone and a resistance zone. Okay, let's imagine that this movement hasn't happened yet. We had a zone made up of several picks. Since this zone is above the current price, what zone is it? It's a zone of resistance. We have 1, 2, 3, 4, 5, 6 picks located in one zone. However, the price cannot always bouncing from the same zone, and it is only a matter of time when this zone will be broken. Now I am going to extend this zone a bit. What does the rule say? Once broken, the resistance zone becomes the support zone. When the price fell into the support zone, it bounced and made a big jump. It happened the 2nd time. Here the zone is a bit broken, but those are just candlestick shadows. After this, the price rose again. We can see that the price is still in that zone. So currently, we have a buy signal on this currency pair. However, if the price breaks this zone, it will become a resistance zone again. So the same zone was resistance, then support, and if the price breaks the zone, it will again become the resistance zone. As you have seen, it's very simple. Now, please open any chart, pay attention to the tops and bottoms, and mark the zones from which the price has often reacted and made huge growth or fall. Mark these zones because they are very important. Now, we cannot know whether the price will bounce once, twice, or 5 times from the same zone. So in the next lesson, I will give you some tips on how to trade support and resistance levels. There are several ways. The first and easiest way is to mark support and resistance levels and then open buy positions when price enter support zones and sell positions in resistance zone. In order to mark a zone as a support zone, it is necessary to have a minimum 2 points at approximately same level. In this case, we had 1, 2, 3 points. And when, for example, the price hits that zone again, and that's happened here for the 4th time, we had a signal to open a buy position. We marked the resistance zone when 1, 2, 3 peaks appeared. That is quite enough to mark this zone as a resistance zone. The next time when the price enters that zone, we'll have a signal to open a sell position. This is the easiest way, but also the most risky. Another way is to wait for the breakout. We are waiting for the zone of resistance, shown here, to be broken, and after that we are going to open the opposite position. So we are not opening a sell position, but a buy position, because this resistance zone is now becoming a support zone. We expect price growth. This is also a pretty risky way of trading, as there are a lot of false breakouts. There is a third way of trading with support resistance levels, and I would recommend it to you. You will not have a lot of trades, but you will increase your chance of profit. This strategy requires that after the breakout of the zone of resistance or support, you wait for a pullback. That is, wait for the price to test that zone again. Why? Let's explain. A few points are enough to mark a zone as support resistance zone, but after that we cannot know how more times the price will be bounced from that zone or will be broken immediately. In order not to gamble, we can wait for a pullback after the breakout to wait for the price to return to the same zone. We are sure that it is a strong zone. Several times it has been confirmed, and now after the breakthrough, we are waiting for the first situation where the price will return to that zone, and then we are going to open a buy position. So we will not open a buy position immediately after the breakthrough, but we will wait for a pullback. We are waiting for the first test of our zone after the breakout. Then we'll have a strong signal to open a buy position. We can also use this technique with trend lines. We have a good example here. We could draw this trend line when we only had these 2 points on the graph. So we'll connect these 2 points and get a trend line. The first way of trading says, whenever the price hits the resistance line, we have a signal to open a sell position. This would pay off here. We can see that the price here also bounced from the same line. We had also a sell signal here, but what happened? The price has broken through the resistance line, and now the resistance line has become support line. We cannot know if this will happen here, here, or here. Also, when such a breakthrough occurs, we cannot know for sure whether the price will turn or it may just be a false breakthrough. For this reason, my advice is to always wait for a pullback. Wait for the price to return to the resistance line, and then you can open a trade. In this situation, it is best to place a trade entry a few pips above the trend line and a stop loss 10, 15 or 20 pips below that level depending on the time frame. I'll show you another example. On the chart you can see the strong support line. We can see the price bounced once, twice, thrice, fourth time, fifth time. 5 times the price was bounced from the same zone, and we can see that the price is at the same zone for the 6th time. When the price bounced the first few times from that zone, we could mark that zone as an important support zone that provides us with signals for buy entry. Every next time the price falls in that zone, we'll have a buy signal. However, since the zone has been tested many times, and we know that the price cannot rising forever from that zone, it would really be risky for us to open a buy position in this situation. Maybe that happens, maybe the price jump, but my advice would be to wait for a breakthrough of support zone. When this zone breaks, we'll not immediately enter the sell position, but we'll wait for a pullback. We wait for the price to come back, test the support zone, and at the beginning of the zone we'll set the sell entry and set the stop loss above that zone. Okay, this would be some basic rules of trading with support and resistance levels.